Hello and welcome to another daily dose of insights powered by Container Exchange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence your business. It's Friday, so it's Fundamentals Friday here at Exchange. Let me quickly share my screen to give you a little bit of guidance to follow more easily. Three core topics here on our agenda for today. Number one, a quick look back at the past week. And they're very, very interesting. We had stronger than expected economic data from the US. So that was specifically labor market data indicating that the economy is still going very strong, if not running hot. And that stronger than expected data has essentially blindsided markets and has led sort of bond traders starting to sell off in a frenzy in order to push up rates. And now the sentiment in the market is that further interest rate hikes are much more likely because, and that's a quote, economies just do not slow down fast enough. So we expect, especially from the US, further rate hikes by the Fed. And this is very much in contrast to last week's sentiment, where better inflation data than expected, especially in France or on the European continent, in the euro area, has led us to believe that interest rate hikes are working and there might be an end in sight for rate hikes. So as you can see, still a lot of volatility and changing sentiment in the market, and even more so important to stay ahead of the curve here. Then on the ocean side, just a very interesting article I read by Sea Intelligence, which essentially analyzed the upcoming capacity situation, especially in Trans-Pacific, but also transatlantic. And there's a new capacity wave heading, especially for Trans-Pacific, with a 19% year-on-year capacity increase by end of August and even 25% by mid-September. So really what we see here is carriers ramping up capacity as they expect peak season to be well underway. The problem is that demand is just not there. And peak season is not really picking up. Ultimately, what will that mean for rates? That's what we see in point number 3 here, where we see the US-India trade soften and box carriers coming under pressure. Essentially, demand is not there to fill the existing capacity, the existing supply, and carriers, in this case, CMA CGM, are starting to take back peak season surcharges, or at least scaling them back to what they had announced before. So as you can see, lots of movement in the markets, especially on the macroeconomic side, but also on the supply and demand side, on the vessel side. If you want to learn more, head to containerexchange.com/insights for more up-to-date and real-time information on the news, stories, and data points that move your markets. That's it from me, from us for today. Thanks a lot for tuning in. Have a fantastic weekend, start into the weekend, and see you all next week, Monday. Don't forget, Intermodal Asia is coming up in about 2 weeks. We'll be there with a stand, so you can't miss us there. Drop by if you attend, and we'd be excited to have a chat about a daily dose of insights and, of course, your views on the market. That's it. Take care and see you on Monday. Bye-bye.